IVM.
I find it baffling how I've lived my life without CRED up till now, because now I can never go back. With CRED Protect, you will never miss a due date again because the app reminds you to pay your bills on time. Plus, it detects any hidden charges on your bill and gives you category-based analysis of your spends. It's like they've thought of everything to help make management of my cards frictionless. Don't believe me? Well, just download the CRED app. Folks, welcome to Paisa Vaisa, presented by CRED, the most rewarding credit card bill payments app, and powered by Quartr. I'm your host, Anupam Gupta, B50 on Twitter, and I am thrilled to have Scripbox with me. Folks, that's our guest for today. They were with us back in Feb 2019 in the IVM studio, days when we used to actually do the recording in the studio. Ashok Kumar ER had done an episode on tax planning with us. Today, I have the founder and CEO of Veteran, Atul Shinghal, and we'll be talking to him right after this break.
Do check out our new show, Tech Life at Intuit, hosted by Sheila Ditya Mukhopadhyay. Sheila Ditya talked to Anshu Verma, Vice President and Fellow Engineer, and Manish Shah, Distinguished Engineer Tech Futures at Intuit. They talk about Intuit's employee-powered approach that has won them many accolades and tons more. Here's what they say about evolving and innovating as a company. Catch new episodes of Tech Life at Intuit every Wednesday on the IVM Podcast app, website, or wherever else you get your podcasts from.
Paisa, thank you so much for doing this for our listeners.
My pleasure entirely, Anupam. We've heard so much about you, so it's my privilege and pleasure to be on the show.
Oh, come on. That's you guys started in 2012, we started in 2017. So come on, you're the senior one out. And I've been to your office when I was in Bangalore and I was doing the recordings. Ashok was a great guy to have. And I'm as someone who's been so early on the scene, I'm really honored to have you. So let's start off. Scripbox, Atul, was formed back in 2012, and so it was among the earliest, on the scene. What's been happening in general in Scripbox since then? It's like, I think you guys are going to be 10 years old next year. And if you can just, throw some numbers out here for our listeners to understand.
Yeah, so let me start at the very beginning as to why we started Scripbox and the journey so far. I mean, our original intent has been and always will remain to simplify this whole concept of wealth management, right? So we said that the whole mis-selling, the abuse of the system is what got us started to say that can we clean up and make it simple and transparent for people to manage their wealth. We started with our concept with what we call the early savers. We want to take away the fear of investing by taking away all the jargon, taking away the complexity, and actually making it very simple for people to get started. So when we first started, our actual byline was stop thinking, start investing. And contrary to most other people's thinking, we actually launched with only 4 funds. Right? There were 4 curated funds because the basic need for a person who was getting investing starting with 10,000 rupees was that, hey, where should I put my money? Right? I don't know, because every word you looked at Mint Top 50. And I have a respect for all of these and all of that. But somebody investing 5,000 rupees, 10,000 rupees, how much? I mean, we'll come and answer a question around diversification. But where do you put the money? So our idea was, can we make it simple for you and align your investment to your long-term goals? So the first product we launched actually was called Long-Term Wealth with 4 diversified funds in it. So obviously there were 800 funds, equity funds that time. We did our own algorithms, did use math, science. So what Scripbox brought was what I would call digitization to wealth management. And what does digitization mean? Digitization is not online, right? People confuse online with digitization. Online is just a channel. Digitization is science, math, data, technology, all of that rolled into giving better customer experiences and better customer outcomes. And outcomes are around algorithms, so basically what Scripbox did was use all of that science and math and data to bring out what we believe was a recommended basket of funds. And as we have grown, we've added more and more baskets, right? So we started with long-term money. We added short-term money for people who had shorter-term needs, say 1 to 3 years. Then people wanted tax planning. So we added ELSS funds, but always with curated solutions. So to keep it very simple for the customer as to how to manage their money, we added an emergency fund over time. As time passed, obviously there were some fast followers and who went down a very different route on a transaction platform. So while the CRED, to your brand name CRED, the simplicity was always been at the heart of it. We have always stuck to our promise of digital wealth management rather than transaction enablement. As our customers have grown with us over the last many years, so has their demand, right? They have matured, they wanted more solutions, and they have gone down what they call their dil mange more. right? So Ashok was with us till about 18 months ago. I came back to run the business in January, February last year. And based on deep customer research, our own insights, our own understanding of the market, we doubled down on the digital wealth management, right? So we now have a wider set of wealth solutions. We launched tax planning and tax filing on our platform sometime last year. We just introduced StockAl, international equity investment yesterday. We went public with that. We're now getting insurance on the platform. So the idea is that as our customers' needs grow and as we attract a customer with a higher ticket size, we're adding more and more wealth management solutions. So what's been happening is that we've been growing. We've been growing at about 100% CAGR. We've also found an interesting piece where we find that some of the offline traditional IFAs and advisors are finding it very meaningful to join hands with Scripbox and become part of the family, right? They say that, hey, the cost, since you understood what the product market fit is for a digital wealth manager, how do we bring that to our customers? So they're joining the Scripbox family, and we've done 3 or 4 transactions in the last 12 to 18 months, and we continue to do that. So based on our customer growth, based on what happened over the last 1 year, we're now at about $500 million of AUM. And yeah, we've grown about 3x in the last 15 months.
Wow.
And probably we'll grow another 3x in the next 12 months. So we've got very strong plans to continue this. So again, in a technology-led solutions company, that product market fit is really critical. And I think that sweet spot has been hit. Now we continue to plan to grow. So I hope I've answered a little bit of...
Of course you have. I mean, $500 million is it's a reasonably good size. And I hope that you actually hit the first bill much before your expectations. Okay, that's big picture. Let's kind of try and zoom in a bit and look at what's been happening in the last 15 months. This entire turmoil, of the pandemic, which we're in July 2021, and I remember that just 1 year ago we couldn't even July 2020 we could still not make sense of a lot of things that were happening. And by the time the calendar year was over, you had a lot of counterintuitive things happening. You would have thought that people would not have money to invest, but all the numbers showed that you had a big surge in people who are trading, people who are investing, and not just in India. This is a global phenomenon. Technology-based platform just exploded. In your view, can you just tell us any interesting trends that you saw in these last 15 months of the pandemic?
Yeah, many things, Anupam, right? First was, I think to the surprise of everybody, the huge divergence between the economy and the stock market, both on the outlook of the economy and what is happening in the stock market. Our belief has always been that the stock markets actually lead the economy by 6 to 12 months because they're able to sort of look at future cash flows, right? And as we spoke to many more fund managers, we understood very clearly that they were believing in the long-term outcomes of the country, right? Yes, 1 year there is a blip, and there was, at that point in time, there were too many unknowns. Health, impact on the economy, impact on individuals, on their job continuity, and the stock markets, right? And I think over time, all of these have stabilized. We also saw that there was either because of availability of time or a me too, there was this huge plethora of demat accounts being opened, and some of the other online players following that route of becoming discount brokers and enabling transactions. We never went down that route because our belief has always been in wealth management, and wealth management is a slightly more long-term view. What we found interesting is that, I had a baptism of by fire, Anupam, at a very personal level. I came back, and as I said, January, February, we just doubled down on our strategy. We said we'll do more with our customers, and the pandemic hit us, right? And suddenly from being in office and doing this planning, you were sitting at home, right? So first you had to survive, right? You had to make sure your customers survive. We opened up our calendars. We were blogging very heavily. We were doing webinars every week. And the whole message was this too shall pass. And we don't know when. Obviously, nobody could predict the future, but we said, hey, the world has seen other crises. Just remain patient. So customers of ours who remained patient, and I think most of them, 95%, have actually grown. So they've done phenomenally well. And the reason Scriptbox has had a phenomenal year, like I said earlier, is that because our customers believed in us, right? And our customers continue to invest. Other thing which we really pushed for very hard, and I think customers realized, was the creation of an emergency fund, right? Because a lot of people unfortunately see investing as that Hindi mein that the famous Maruti ad, na kitna deti hai, and we keep telling them that kitna deti hai is not enough. It's kafi deti hai. Is it meeting your needs, right? So the whole philosophy behind sort of wealth management and long term, it's got to be goal based investing, right? So the way you think about investing is saving. Am I putting money aside? That saving, am I investing, and am I investing with a purpose, right? They're very, very different philosophies, right? So I think that what came through clearly is that people who are investing with a purpose, right, who are saying, okay, I want to have a retirement, I want to put my children through college, I want to, those people were able to do more, right? Because one, they had time. Secondly, they realized that they need to take care of their finances. They can't, the speculation investing doesn't matter. Another, I think what we also found was a divergence between sort of, I would say, the younger crowd and the slightly more mature crowd. The more mature crowd doubled down, looked at their investment, looked at their long-term planning. The younger crowd sort of said, went down the Robin Hood route, right? Lots of transactions. And I think the rising tide lifts everybody else. But yeah, let's wait for see how this pans out. Our belief is that what the good thing is that from a market perspective, a lot more participants are there. They will mature, their money will grow, and it bodes well for Scriptbox. The bad thing, a bad outcome, unlikely, is because we know that over time, historically, at least empirically, has been proven that 90% people lose money on trading. Right. And if that continues, I just wish and hope that the people who do lose the money don't lose belief in the system, don't lose belief in the markets. Right. What happens is that people will say, oh, no, this is not for me because I lost money. Right. You do not lose money because it was what you did. Whereas if you had put the money in the right asset classes and planned your investments, you would have a better outcome. So anyhow, so we learned a lot over the last year.
Yeah, I'm going to, slip in a small question out here to look into this trend in the last 15 months. So even today, right now, maybe trying to take a future call in a way of asking you this, that Atul, if I were to ask you, what are the 3 questions that you're getting asked the most? Okay, could be from friends, could be from family, could be, the place where you stay, your neighbors are saying, yaar, aapka to Scriptbox hai, aap kuch batao humko, or it could be your clients or the people on your platform. If I were to ask you, Atul, what are the 3 top questions that people are asking you the most today? Okay, what would those 3?
So in a rising market, now the first question you get asked, is this a good time to enter or should I wait? Right? Because people want to time the market, and we keep saying, don't time the market. It is timing in the market. It is not time in the market. It is timing in the market. It is amount of time you spend in the market. Don't try to time it every day, because you can't. Nobody can. But yeah, again, people are always, they just want the optimal part, right? So should I invest now? Second, which is a similar question, should I exit now and wait and come back later when the market crashes? So everybody is hopeful of the market crashing, which is quite a bizarre phenomenon, right? Yeah. That the fact that you're asking me this question, that means you're expecting a crash. And why do you want to predict that? If you've got a 7-year outlook, why do you even think about it? So should I come in now? Should I exit now? The third question, which is most interesting for us, which I think Scriptbox is solving for most, is what do I do with my existing portfolio, right? If you look at Anupam, most people have a plethora of acquisitions, or what I should say, products which they have bought over time or have been sold to them. They'll have an LIC policy, they'll have some ULIPs, they'll have some stocks, they'll have some mutual funds. So when we do the portfolio analysis, what scares us is the number of funds people have. Right. And so you get both diversification and concentration. Right. We looked at some portfolios where somebody had 55 funds.
Wow.
Right. And something was 2,000 rupees, something was 10 lakh rupees. And you're looking at this and saying, hey, what's going on here? Right. So those 3 questions get asked. Should I invest now? I've got some extra money, or is it too hot? Should I wait? What do you think? Hey, should I withdraw all my money and wait? And we keep saying, don't, just stick to your plan, stick to your asset allocation, stick to your goals.
Okay, last question before we go into the break, Atul, technology. A lot of fintech startups that have come into this huge field of investment always say that we don't know anything about personal finance, or we are not a finance company, we are a technology company. Okay, so I want your perspective on that. How has technology changed the world of wealth management, and what do you think the future of wealth management is going to look like?
So I think, first of all, anybody saying that we're a technology company and not, I think they're fundamentally, I think there's a flawed outlook, right? Technology is just an enabler to find the right consumer solution, right? It's like saying, I got a spanner, now find me a nail. That's the role of technology, right? It's not. Do you have to hammer the nail at all is a question to be answered. So we see technology, or we see digitization as a combination of science, math, data, customer experiences, engineering, technology. So that's how we see the future, right? So that's what we are building. And the ability to do all of this at one place in a repeatable manner, right? So what do I see wealth management to be? That like portfolio, Scripbox does a quarterly portfolio scan. And you don't have to wait for anybody to call you. It's just there on the system. The system runs it for you. It's like an alarm clock, right? It just goes off. We've got a financial alarm clock which reminds you your tax payment is coming up. So digitization is about convenience, right? It's the role of technology is to give you better outcomes, because math and science will obviously give you can crunch larger numbers. Is to give you habit and give you automation, right? So that's how we see technology playing out. It solves the simplification problems. It solves the access problems. It solves the larger footprint. But unless you understand the domain very well, so you have to apply technology to wealth management and not wealth management to technology. So I see the future, people who understand the consumer, who understand the domain, and combine that with the power of science and math and technology and data, giving better outcomes.
Great. So folks, we're going to take a small break out here. On the other side, we're going to come back with specific questions about your money. So on that note, it's time to take the CRED convenience break. We'll be right back on the other side. Don't go anywhere.
$100. That's all it takes to begin your journey with Bitcoin and Ethereum. No, really. With Coinswitch, you can start investing in over 100 cryptocurrencies with just 100 rupees. On top of that, there are zero charges for deposits and withdrawals, so you can trade, buy, sell, however and whenever you want. All of this, plus their extremely intuitive interface, makes Coinswitch the perfect app for beginners in the crypto space. But don't take my word for it. Just download Coinswitch for free and try it out for yourself. If you'd like more information on cryptocurrencies, tune into A Show About Crypto with me, Rohan Joshi, my new adventure on IVM Podcasts. Coinswitch, kuch to badlega.
And now, folks, we have a listener's question on company analysis.
Hello, Anupam. Where can I get earning reports? Stuff like the result table, investor presentation, etc. for companies I track?
Well, I'll tell you what. Check out the Quartr app. Okay, the app has a press release from the company. The press release that the company declares each and every quarter, which contains the earnings table and the investor presentation and basically everything that the company declares with its quarterly results, which is mandatory by the exchanges. And you can check all of this data. It's in easy downloadable form on the Quartr app, right? So let's say that you're tracking a TCS or a Reliance and you want the latest earnings report. The company declared its earnings yesterday and you want to check out the table and anything else. Well, the Quartr app has all this. It has everything that the company releases and declares to the exchange each and every quarter. And the app is called Quartr, so that's a Quartr app. Quartr, right? That's a Quartr app. And welcome back to this really special episode of Paisa Vaisa. My guest, Atul Shinghal, founder and CEO at Scripbox. Chalo, Atul, now let's get into this. Okay, I had asked you about 3 questions that you get most from people. But now let's talk about 3, you can look at it as conceptual things, or these are the few questions that I get a lot from listeners, or it's the topic of conversations. I think just 4 or 5 of them very, very basic, but you need to understand the basics before you actually start investing your money. So first up, absolutely basic question, mutual funds or stocks?
Again, it depends on the quantum of wealth, depends on horses for courses, and depends on your own capability set, right? So whatever you do, whatever investment you do, whatever asset class you invest in, whether it's equity or debt or stocks or mutual funds, it depends on your time availability and your own understanding. right? Like we say, the worst doctor today is the WhatsApp doctor or the Google doctor, right? Similarly, if people try to do investments on their own by trying to sort of figure out that, hey, I've got half an hour in the evenings, I'll do that. It's the wrong decision, first of all. That said, for somebody getting started, and again, depends. If you're investing 10 crores, you need to be in multiple asset classes. You're investing a lakh. The advantage of mutual funds is that they're well regulated. They are managed by professionals. They give you suitable diversification. It's like a coach helping a team player, right? So you got your coach by your side. Whatever you do, and this is not to sell Scriptbox, please trust a professional wealth manager to manage your money. The moment you get to a certain size, you need that hand holding, right? You don't learn swimming by jumping into the deep end and swimming yourself. Some people might survive, but there's an equal chance of you drowning. So you have to have a coach who's by your side. So the way, again, not to sell Scriptbox, the way we describe Scriptbox is your boatman taking you on your boat, sometime across choppy waters, sometime across still waters. In that, we have till today managed all our portfolios with mutual funds with exactly this. The idea being save, invest with a purpose. If you're investing with a purpose of a certain corpus, invest through mutual funds. As our customer portfolios have grown and as we've acquired larger customers, we've added equity as part of the overall diversification of the customer. That's it. So yes, first choice, mutual funds. They're professionally managed. They're well regulated. They give you the ideal diversification. You can create a very, very successful large portfolio for yourself to meet your needs using mutual funds. As you grow, yes, you can look to add stocks to that.
Lovely. You spoke about your collaboration with StockAl. So I have to ask you, international investing, your views?
I think, again, depending on once you reach a certain portfolio size, it is important to find, and again, diversification is about finding uncorrelated assets, right? And we have clearly seen if you look at a sort of a 5-decade period, you can't look at a monthly, daily number, right? You do find that the markets move in different directions at different points in time. Plus, if you've got sort of plans to send your children abroad, or you've got having a dollar hedge helps. Right. So, yeah, we do believe that you should have a certain percentage of your portfolio in international related instruments. Now, whether you do that through funds or you do it through ETFs or you do it through stocks, again, it's very, very personal, your portfolio size, your construction. But yes, at a certain point in your portfolio, I think having 10, 15% of your because it gives you access to companies which India today doesn't have, right? Say, example, a social media company. You really don't have those in India, or a really high tech company. But once those companies come in India, India continues to be a very attractive investing destination. Remember, right? With a say 6, 7% or 8% inflation related growth and sort of 5, 6%, 7, 8% market growth, 14, 15% nominal growth is anyway there in your portfolios, right? So why not continue that?
Yeah. So folks, just again to repeat what Atul had just said, consult your financial advisor before taking any decisions. Remember that we're talking at a very generic level out here. You could be someone for whom international investing does not make sense. You could be someone for whom you need to have 80% of international stocks. Who knows? You're talking at a very generic level out here. So please consult a financial advisor before taking any decision. Okay, Atul, this is an important one. This next question, you've also got a post on your blog, on your website, and folks, you should really check out Scriptbox.com. They've got an extensive blog. There's a lot of good reading material out there. Go to Scriptbox.com and read everything that they've got out there. I want you to spend some time on this, okay? Because a lot of people get both these concepts a little bit mixed up, okay? Asset allocation and diversification. Okay, you could explain both as concepts. You could explain how they're related, etc., etc. So go for it.
First of all, thanks for the plug on Scriptbox. I really appreciate that.
I mean, I just love the material there. I'm saying it, it's not out of any promotion or whatever. And I've been seeing it right since Ashok was there on the show, and even earlier, in fact. Please go on.
Thank you, Anupam. Right. So I think it's again, first, the simple concept. Asset allocation is allocating your investments into the right asset classes. And broadly, they can be gold, property, debt, equity, depending on the asset classes, to meet a certain goal. Right? Say you want to save up for an emergency fund. It's no use putting that money into equity. You have to put that into a liquid fund. That's the safest, right? It's liquid, it's available to you. You want to put money for your retirement, right? A large portion of that should be, and you're 35 years old or 40 years old, a large portion of that should be in higher risk, higher return instruments like equity. Now, within equity, you could look at large cap, mid cap, you could do different things. Again, your financial advisor, your wealth manager will tell you what the right plan for you is and get you that flow. So it's about keeping your life goals and your financial goals in mind and allocating your assets for those needs over time is the right way to do it, right? That's asset allocation. Diversification, again, you can look at it either at your portfolio level or at a class level. So let me take an example. If you are investing, say, in equity, right? You could be all of it in large cap, all of it in mid cap, all of it in small cap, all of it in international fund, like you said, 80% somebody could take. But diversification would be that across all of these, I have taken a stand, right? I've taken, say, 30% in large cap, 20% in, and that again, based on portfolio theory, both based on expected returns, you're able to diversify, right, across those. Within, say, large cap, now it makes no sense to really go and buy 20 large cap funds, because that's not diversification, right? You're just there. You just pick the top 4 funds, the top 2 funds, and depending again on your allocation. So asset allocation is much more around your life goals, which you're doing within that asset class. Diversifying into a relevant basket is important. Again, like I gave the example of 55 funds, and in that particular portfolio, 70% of them was in multi-cap. So there was a lazy financial advisor who had just sold you multi-cap and saying, let the system take care. And so diversification is about finding within an asset class the right sub-asset classes or categories, as SEBI calls it, and within that, again, not being too diversified. So 2 to 4 funds in large cap, 2 to 4 funds in this thing, because ultimately most of fund manager, you have to just pick the right fund manager to do your right job for you. So I hope that answers your question.
No, it does. I mean, the way I've always looked at it is that 100 minus age will give you asset allocation if you follow that formula. But it's just bringing things down to simplicity.
Yeah.
And then once you've decided that, okay, this is in debt and that's in equity, then whatever you boil down below that is what should form the remainder of your plan. I'm going to go, I'm going to sneak in one more question. I had sneaked in one question in the first half. I'm going to sneak in one more question in the second half. Atul, crypto. Tell us what you think about it.
So I think the concept behind crypto, which is the blockchain technology, is absolutely phenomenal, right? It actually changes the way things can be done on technology. But I don't know if cryptocurrency is the right application of that, right? Because as an investment class, we are nervous about it. There are people taking it because there is no underlying asset behind it. The only underlying asset is that there is going to be scarcity. Right, but scarcity of what? Scarcity of a tradable instrument only amongst people who are interested. So this is, it's a strong statement to make it. This time it's sort of like philately, right? That stamp collection. That there are only so many stamps available, and there are certain people interested in it. That said, we are watching the space, how it happens, and what happens when it becomes a tradable instrument, when it becomes a regulated instrument, and that's completely anathema to people who set up cryptocurrencies, right? They don't want the regulation.
Exactly.
So I think this whole idea at this point of it as an asset class, we are not convinced about it. Is it a good thing for some people to do some speculation? So that investing, speculation, gambling, depending on where you see yourself in the morning. I'm quite surprised by the number of platforms which are allowing 100 rupees into bitcoins. I mean, you won't even. So I think that's pure speculation.
Sure. I personally will not have it as part of my financial plan over long-term wealth.
Yes, absolutely.
It's fine if it gives me 100% per year, but that doesn't really matter to me. I've never, I'm like you said, I'm a fan of blockchain. I'm even a fan of the kind of wildness that crypto has. But anyway, let's not go into that direction.
So my only suggestion to listeners would be, please do not make it part of your portfolio. You have some spare change, and I write this to people. If you've got some spare change, you want to do some gambling, you want to do some stuff, absolutely. Understand the concept behind it, understand the technology behind it, understand the power behind it. And if you want to dip your toes just to understand, absolutely. But it cannot be part of your portfolio allocation, part of your wealth management, at this point in time, at least.
Yeah, if that is part of your retirement goals, folks, I think you need to just rethink that one. Okay, last 2 questions now, Atul. Active or passive? Big debate on this one. And I want your views also on this, right? Because we've seen how large cap mutual funds have performed, right? And in fact, I was just having a look at small and mid cap funds for the last 1 year, and there also, okay, I accept that 1 year is a very small time frame for small or mid caps. Okay, with that disclaimer, it's still, I noticed that even there, a lot of the funds could not perform. Probably, I think the number was not as bad as active, as bad as large cap, but it was closer to 50%. I think in case of large cap, it is higher, upwards of 70%. Anyway, all that apart, Atul, simple question: active or passive?
Again, I'll repeat my horses for courses, right? So, yes, depending on the asset allocation, depending on what you want to achieve, over time, passive funds would become part of your portfolio, right? The philosophy is that if alpha is available, and India is still a market which we believe, our research tells us, next 5, 7, 10 years, alpha is available, you should have a certain percentage of your money in and actively managed funds. Again, right? So let's look at it. You put a rule of thumb, age minus, and you're 40 years old. Say you got 60% equity, you add your provident fund, you add everything else, you probably have 50-50 in debt and equity, right? Within the 50% of equity, you'll probably have something in large cap. So if you are looking at a 5-7 year view and you believe there's alpha available, it's worth investing in that, right? Again, you have to pick the right fund managers. You don't have to over diversify. Yes, does it make sense to add a few index funds? But again, as I said, it's got to be part of your long-term strategy, not because you believe that over the last 2 years, 3 years, for multiple reasons, certain funds have not been able to beat the index. But we believe that there is alpha available at least for the next few years. The customer should not be active. So the customer should be passive.
I like that.
The customer should not go and try to time the market every day. He should just be passive. Trust your wealth manager. Ki boss, you will take care, and let him decide what is best for you. If he believes that a certain percentage of your funds at that time point could be 100%, that it could be only index funds. But I think that discussion between the intent of the investment and the investment manager or the fund manager is important. But the customer, I really believe, should be passive.
Yeah, I mean, it's got a very impassioned debate going on, this entire active versus passive thing, because I have no idea there are a lot of moving parts here, Atul. You know how the industry is.
And the 5 years. I think it's a flavor of the month kind of thing. It's like what happened last year in Demat accounts. I think that velocity is slightly reduced now. And yeah, I think the next 3 to 4 years, 3 to 5 years at least, this will play out.
Chalo, okay. Last question, Atul, for you. What's your advice for a 25-year-old who is setting up a financial plan? What would be your words of advice to him?
Very simple. Start early, stay invested. Start early, stay invested. Believe in the power of compounding, and it'll make you very, very wealthy. But okay, some 3-4 rules of thumb. Yeah. First and foremost, it's like a cardinal rule. Save at least 20% of your income. That is non-negotiable. It's like paying your rent. It's like eating food. Whatever you earn every month, 20% has to go into a piggy bank, into a savings bucket. It's got to go there. Now, the allocation of that, depending on your personal circumstances, start with creating an emergency corporate fund. We don't know about our jobs. We don't know what's going to happen. So create, say, 3 to 6 months, and depending on your parents, are they still supporting you? Are you not? Are you independent? What do you want to do? Create an emergency fund. It takes some time, but just make sure you have that corpus aside. If you lose a job, if something happens to you, you can take care of it. Make sure you have health insurance, first of all. Make sure that you have health insurance, because that's really critical. Secondly, once you've done that, take the rest of the money and sort of split it into two. One, you take a long-term view, right? You put into a long-term plan, and it's like a fill it, shut it, forget it. You be passive, let the wealth manager be active, and let them manage your money for the many years. Also keep a certain amount of money aside, which you can spend every year, right? So you want to take a holiday, you want to buy a laptop, you want to buy a mobile. Let that not come out of your monthly expenses. So the saving of 20, 25, 30% should add up in such a manner that you're able to, it's like jam jars, right? One jam jar, if something goes wrong. One jam jar, I'll retire happily. One jam jar, we all have desires, right? We want to take a holiday, we want to take a small break. So saving up for that and only spending from that jam jar is important. Right. So I know CRED is a credit card company, and I have spent many years in a credit card company. I used to work for Capital One for 10 years and understand that domain very well. I would say from a saving investment perspective, my advice to somebody getting started is get started now. I mean, we've been proven this. I mean, we have an Excel spreadsheet which shows this, that somebody who's 25 and saves till 35 and lets the money be till they're 60, it stops at 35, and somebody who starts at 35 and invests till 60, the guy who started early, right, will have more money, 4x the money than the person who started 35. So starting now is absolutely essential. I hope that gives a sense of what people are doing.
It does. It in fact leads me to what I would say is the last question, which probably should have been the first, which is an introduction to Scripbox for people who do not know about Scripbox. Could you just run us through the various services that you offer, to our listeners, and any approximate costing, pricing, or anything that is involved out there?
So Scripbox is, as I said, a digital wealth manager, who's here to manage your wealth. We do all 4 pieces of the puzzle. We first spend time understanding your needs. So we've got goal-based investing, retirement calculators, depending on your needs, we understand your needs. We will then construct a portfolio and this is all automated. This is all happening on the system, which is if you're investing 10,000, what should you do? If you're investing 50,000, what should you do? If you are saving for the long term. So we'll create a portfolio for you using math and science. Absolutely zero bias. Commissions don't go into the equations. Then we'll ease of investing, right? Single click, we'll set up an SIP or a one-time investment. We'll set up a step-up SIP. Most importantly, on a quarterly basis, we'll review your portfolio. On an annual basis, we'll rebalance your portfolio. So this entire full stack wealth management for your family is what Scripbox does. We have 2 business models available to us, to our customers, or revenue model. They can either choose to pay us a fee under the advisory part of our business, or we can collect what we call our revenue from the commissions we earn from the manufacturers. The choice is the customers. We obviously will only we don't double dip ever. Either we collect the commission from the manufacturer and we'll transparently tell you how much, or we'll give you direct funds and give you an advisory fee. So the choice lies with the customer as to which model they want to choose. Today, that choice is available to people who are investing more than 50 lakhs. Over time, it will become available to more. We also do your tax filings for you. We also help you with your insurance planning. So it's a full stack wealth manager available to you digitally. And if you are desirous of it, we will also assign a relationship manager to you, because some people want to talk to a human being. They want to see your face on the screen. We'll assign a relationship manager to you who's there to ask your questions. Who's your boatman apart from me on the boat with you, who'll handhold you across?
That's good to know. Yeah, you've got a relationship manager. I mean, I can't think of too many startups that have a human being involved on the other side. There's always that bot. Bot is really. It's good to know that. So, folks, that is it. The website is scriptbox.com. Atul, the app is on both the stores, Apple and Android?
Absolutely. Yeah, with a 4.7 or 4.8 rating. So, yeah, we're right up there.
Lovely. So, go for it, folks. If you want to know anything more about Scriptbox, the website is scriptbox.com. The apps are both on the Apple and the Android store. And Scriptbox has a pretty proactive social media team. So, if you have any questions, reach out to them on Facebook, Twitter, LinkedIn, everywhere, right?
Absolutely. We will respond. Yeah.
And that is a wrap on this episode of Paisa Vaisa. My guest, founder and CEO of Scripbox, Atul Shinghal. Atul, thank you. Thank you so much for doing this for our listeners.
Thank you, Anupam. Thank you for having me on the show. I really enjoyed the conversation. And all the best to all your listeners. Stay invested, keep investing. Stay invested, keep investing. All the best to your future.
Love that advice. Thank you, Atul. And now, the CRED privileged tip of the week, folks. Have an emergency fund. This last 15 months has taught us how important it is to have money for a rainy day, for an emergency when you need it. So figure out in which instrument or where you want to put this, but please have an emergency fund as part of your financial plan. And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much for listening to Paisa Vaisa, presented by CRED, the most rewarding credit card bill payments app, and powered by Quartr.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
IVM